Welcome back to Economic Outlook. Today I want to take a break from some of the heavy analytical topics I've covered recently to look at one of the websites I reference in many of my articles, CNBC.com. I've noticed some trends in CNBC's reporting recently, and I'd like to talk about them here. I decided to look at the website today, October 27th, and examine how it reflected trends in the market. As everyone knows, the recent market rally has probably raised more questions than it has provided answers about the prospects for long-term recovery. CNBC's reports echo the dichotomy of sentiment, both bull and bear, about the current market. At 7:40 a.m. Eastern Time this morning, CNBC suggested a few stocks which were set to climb in value during the trading day. At 10 a.m. Eastern, CNBC reported that consumer confidence skidded unexpectedly during October. At 10:58 a.m. Eastern Time, Art Cashin speculated that dollar carry trades could weigh upon markets. This is very similar to Nouriel Roubini's thoughts yesterday. 2 minutes later, at 11 a.m. Eastern, David Rosenberg speculated that the market was overvalued by at least 20%. Then at noon Eastern, CNBC noted that the Dow Jones had climbed higher after what it called upbeat earning reports. And finally, at 1:23 p.m. Eastern, CNBC posted 5 reasons why U.S. retailers may have more of a, quote, jolly holiday this year. CNBC's stories are characteristic for a market feeling its way through a nuanced, difficult recovery period. Traditional leading indicators contradict one another, and expert opinion differs greatly. Readers are curious about what will happen in the future, so contrarian opinions fulfill this need. CNBC presents both the bad news and good news for markets, often side by side. This dichotomy creates a strange mix of headlines for CNBC's visitors. Contrarian stories are natural draws, and in a volatile market, there is room for hyperbole on both sides of the bull-bear spectrum. There is also the usual mix of stories which are little more than attention-grabbing lists or speculation. Today at 1:30 p.m. Eastern, a visitor to CNBC.com would have seen the following stories stacked one atop the other on the main news board. The first story gives reasons why retailers may have a better holiday season, and the second story details why Rosenberg believes stocks are overvalued by at least 20%. Next comes a story on the homebuyer tax credit, and then a list of hair-raising money tales where readers share their worst financial experiences. The next story looks at whether or not the last 18 months were Warren Buffett's most successful ever. The next opinion story shows why it's a bad year to, quote, get wrecked, end quote, at the company party. The next story, Carl Icahn, discusses the CIT plan as protection for small bondholders. The next story discusses why the porn industry is floundering, but the adult novelty business is booming. The next story shows why Ford is beating Chrysler and GM in car quality. And the final story discusses how AIG's former CEO is trying to lure talent from his former firm. As you can see, these stories run the gamut of hyperbole. Dire predictions are set alongside good news and attention-grabbing fluff. This chart summarizes all of the stories on the main page and groups them into one of 4 categories: bull market, bear market, attention-seeking, or news and opinion. Now, if an opinion piece falls into either the bull or bear extreme, it's grouped accordingly. Not surprisingly, CNBC offers an equal number of stories predicting future bull or bear price changes. Holiday prognostications and improving home prices are set alongside warnings about the dollar carry trade and estimates of overvaluation. Interesting to me is it's the hodgepodge of attention-seeking stories that are really the most noticeable part and actually appear more frequently than the bull-bear dichotomy. These stories offer little hard news content. Their main intent is to capture the attention of the reader and provide light commentary. At best, these stories have a tangential connection to major markets, and at worst, they have none at all. Readers' hair-raising money stories are juxtaposed with real news on the future of the homebuyer tax credit. The travails of the pornography industry receive a larger headline font than August home prices. In fitting Halloween fashion, the site raises the kind of grim specter of Maurice Greenberg returning to lure talent away from AIG. The site also plays to readers' desire for schadenfreude, with lists of hedge fund mansions being sold at discount prices. It also offers insights into, quote, getting wrecked at company functions. CNBC's expert advice? Don't do this in a tight job market. The cutting-edge reporting continues with a list of the best-selling adult DVDs of all time, and I wish I were making this up, but an analysis of why sex toys are actually recession-proof. Of course, some of these stories are entertaining, and a few of them offer real insight buried within frivolous concepts. My complaint involves the placement of these stories alongside other news of greater consequence to investors and financial professionals. CNBC claims that it's first in business worldwide. In my opinion, this claim is undermined when the website actually runs these types of fluff stories directly alongside, or sometimes even above, actual major market news. The legitimacy of CNBC's claim rests in its information and data producing services. Readers go to CNBC to get timely information on the markets. Of course, they want to be entertained as well, which is why I don't have a problem with these types of stories being featured on the site, but not when they're placed above or in parallel to actual important market news. CNBC should assign novelty and entertainment value stories to a more clearly defined category of their own. It should also keep the main headlines free of these types of stories so readers don't get confused as to what is real news and what is simply there for entertainment purposes. CNBC's website has ample space, so there's room for all of these things. However, the line between fact, news, and opinion should be much less ambiguous. CNBC can maintain its reputation for news and information while still being entertaining. More judicious headline management and better story placement can help CNBC accomplish this goal, while being jointly entertaining and informative to its readers. Thank you for joining me here at Economic Outlook. In my next entry, I'm going to explain exactly what a dollar carry trade is and how it's evolved over time. As you've seen in this entry, the dollar carry trade, along with general questions about the dollar's competitive status as the world's reserve currency, have received a lot of press. I want to explain exactly what a carry trade is, how it's evolved over the years, and what some of the implications may be. I'll see you next time here at Economic Outlook, and as always, thank you for listening. Be sure to check out my website at www.econoutlook.com. Thanks.